We'll see a small relief rally, I think so. We've probably already seen half of it as we're getting closer to some kind of deal. But there's much more to discuss about the euro than just the Greece situation.
Right now, are we seeing a conviction move in the single currency, or is this a continuation of a short squeeze?
I think it's a continuation of a squeeze. I think it's a squeeze in the currency, it's a squeeze in the bond markets. I think when Draghi mentions volatility is not a concern, or they are certainly not going to react in a monetary fashion to volatility, we mustn't forget volatility is movement around a trend. Now, if that trend is up and steep, then they will react. But they will react to the trend. They don't want higher rates, certainly not at this time. But the market may have been positioned for even further QE, or certainly an extension of the program beyond September 2016. And I think what we're seeing here is maybe the market adjusting to that it well could end. If inflation stays on this new target, then it could end September 2016. So an adjustment of positions.
But between now and then, if the Eurozone economy does warrant it, Draghi has made it very clear that he is open to extending asset purchases, yes.
Absolutely.
So on balance, do you think that this is a euro negative tone that he's struck?
No, I think it's a pretty neutral tone, to be honest, and an optimistic tone. He's saying, and a little bit early, he's saying that this is already working. I mean, we only implemented the purchasing in March, so it's very early days yet, and maybe it's other factors actually creating this little bit of inflation. It could just be, sentiment and whatever else. But any bad data coming out, any risk of deflation, any risk of not reaching the new target of inflation, they will react, and they can easily, extend the program.
Let's talk payrolls up ahead. What's a pro-dollar number going to look like?
I think the actual payrolls number is not that significant right now. No one's expecting anything in June. Expectations are varying between December and September, and we have a string of data until then to make us decide which one it's going to be. And actually, bad data over the course of that time could even push expectations further out, which would be a surprise. I
guess the devil is always in the details of the payrolls number, isn't it? Are we going to see wages growth? And if we do see anything meaningful, is that going to help the dollar bulls?
I think that would be a positive surprise. If we do see some meaningful wage growth, then I'm sure expectations very quickly will move towards September.
All right. Let's talk BOE as well, because it's been largely overshadowed by what's been going on in the Eurozone and the Greek debt dynamics. On hold?
Yeah, I believe so, absolutely. I think the worry about the UK now is the referendum on the EU upcoming. But until then, while they're working with the other EU leaders of coming to some kind of solution that will make yes even easier for the government, we will have to wait and see, and that will weigh a little bit on the pound just for the uncertainty.
But you buy those dips, do you?
I still like sterling as an alternative to Europe. I think there's lots of trouble ahead for Europe, and we will have these. We've just seen a big dip in the sterling against the euro here, and I'm looking for levels here. I think somewhere between 73.5, 75. I still think that the euro looks strong compared to the pound.
Back to the Fed and the path towards normalisation. Remind me of the base case once again at Nordea for the first Fed rate hike.
We're still saying September and sticking with that for now. It will take some significant data changes before we change that forecast.
If the Fed does take action in September, how are we positioned out here in Asia? Are we going to see currency depreciation? Are we going to see outflows? Or is it going to be a much more manageable scenario, less volatility compared to the taper tantrum we saw a few years back?
I think as we move towards September, I think markets will adjust. I think we will have data to support the decision, because otherwise they will wait to December. It's become so data dependent now, so we have a chance to react on the way. So on the day it happens, I don't think volatility is going to shoot up dramatically across all markets.